Good afternoon, traders. This is Christian from Hertz Tropica Trade Group, and this is your end of day recap for Tuesday, January 23rd. Well, the indices managed to squeak out some gains there for the S&P and the Qs. I was, I don't want to say impressed by the price action, but given where we were like around midday, I think that's a pretty good result. Q's up 40 basis points. I mean, that's, very nice. And that's a gain over the session too of 25 basis points. But price action was a little bit all over the place. For example, the small caps, which, I, for one, was looking for a little bit of continuation in the small caps, given what they did yesterday. But I think one of the first things that we noticed, even before the start of the day, was that bond yields were going higher. I did a comparison yesterday um, on Twitter, talking about, how yields or interest rates, affect certain areas of the market, right? Now we've known about that, over the last year specifically as yields have gone higher, that interest rates moving quickly, especially when they're moving fast, really can have an impact. Sorry, let me just go to this note that I put out, which there we go, right? And this is a chart that like I said, I sent out yesterday, which is a relationship, not a relationship, but just two charts, one of TLT and one of IWM, just kind of showing the relationship. And notice it's a relationship. It's not tick for tick exact, but there is some meaning there. When TLT moves higher, you are going to basically have a better chance at IWM, going higher. So TLT is the candlestick chart, right? And as TLT has gone down, just talking about this year alone, right? As TLT went down for a good portion of January so far, IWM has done the same thing. So I don't think that this is by accident, right? I think that this is pretty meaningful, and that's why I'm going over this first. As we talk about interest rates and in many of my end of day videos, and well, sometimes unless there really isn't much of a move, then I don't bring it up. But when I think that there's something significant going on, I do bring it up. And clearly this is what we saw back in July, August, September, October, where the small caps really underperformed. And again, that's because my thought is there's a fundamental reason there, and that's because the small cap companies, they don't have as big of a cash, um, and they may not have refinanced rates. They don't have as big as a cash balance as, say, like an Apple or some of the bigger cap tech names. They don't have that type of a cushion, and therefore they're more exposed to the interest rate move. So the other reason why I put this together was because we saw a nice move in IWM yesterday, right? And you have to, you kind of, at least I was thinking, would that be the start of a move? And at least I think that's, yeah, TLT should be this one. Yeah. So was that a start of a move, or what basically needs to happen in order for small caps to get going, like they did back in November and December? And again, if you look at what happened in November, December, these things were going side by side. So let's start with that chart first. We could talk about, by the way, Netflix is at the highs here, up 528. Very impressive quarter for them. I want to talk about earnings too. But yeah, I mean, so TLT, here's what we did for the day. Down about 80 basis points. We did not take out last week's lows. So I view that as a positive, a small positive for now. We didn't, so like I said, this is where we were midday, and it looks kind of iffy. Here's what TLT looks like, right? So we've kind of come in here and we've broken through the January value area, but we have not really pressed that far below. Here was the rally yesterday right into the bottom of the value area. So this has kind of been this is a rejection, but we haven't taken out last week's lows. And I think really that's what we want to pay attention to, because if this continues to break, right, and keep in mind, it's only Tuesday so far of the week. notice where we are in terms of the value area too. So if some of you are thinking, this is going to be a great year for IWM and small caps, then you do not want to see TLT break. If you're following me so far in this video, and if you agree that there is a relationship with bonds, and again, we're talking, by the way, the interest rates that we're talking about are on the long term. We're not talking about what the Fed is doing or what the Fed could do in March, right? So that's the overnight rate. This is the 20-year rate, right? They don't control that, right? Supply and demand controls that. So if this breaks 93.88 by the end of the week and starts to make its way down to where we were in October, I would not be putting my money on going long the small caps. In fact, I would think that they're a possible short, right? Because of that relationship that it has with interest rates. Now, the other thing that could happen, of course, is if TLT just goes sideways, right, and doesn't do much, then IWM may be able to kind of do what it's normally going to do, and not be that affected by interest rates, right? So again, when this is trending, we want to pay attention to the relationship that's taking place, because I believe right now there is a relationship. Somebody asked me earlier, they're like, well, why wasn't this such a thing years ago? Well, because TLT, we didn't have interest rates at the level that we had. For a number of years, we had interest rates close to 1%, 2%. They weren't a factor, right? So that's the difference, right? And anything, by the way, in trading, you have to adapt to when there's something that changes, right? Some traders, I get it. They like rules. Well, if A happens, then B happens. Or if B happens, then C happens, right? They like these little rules. But one of the things that I try to teach, right, is not to be rigid, right? Markets will do whatever they want to do, right? And sometimes these relationships they change over time, right? But then again, their correlations sometimes change from time to time. But yeah, we're at a 4%, as a reminder that since the beginning of last year, we've really seen interest rates move, and that's why it's a factor, right? Excuse me, been battling a cold. But if interest rates go back to 2%, right, then it's not that big of a situation, but it is a situation for now. All right. So that's one of the things that I wanted to cover. And, in a day where things were kind of calm and choppy. But you could see, that's why IWM, which was up 0.75% pre-market, really started to pay attention to what bonds were doing, which sold off through in the morning, and the good and a portion of the morning. Another thing that was interesting today was the VIX. VIX was not indicating that there was any, major volatility coming into the market. In fact, it just continued to kind of move down throughout the session, and the VIX right now is at 1255, right? So very low. Market not indicating that any short-term, big volatility is coming. Again, just looking at what 30 or what the VIX is. It's not a fear index. It's telling you what implied options are pricing out 30 days from now in the S&P. All right. Sectors I will go into for a minute, but I wanted to talk about more, not just IWM, but I wanted to talk about the S&P. Right. So this is what I kind of saw this morning. If we go to this 1 hour chart, notice that we kind of hit a little bit of consolidation, right? And I thought that this could be a head and shoulders in the making, but it's not a head and shoulders until it really breaks. A lot of charts can look like head and shoulders patterns, right? A lot of people were talking about that with NVIDIA, and NVIDIA blasted through to the upside, right? Kind of the same thing. For now, it's just sideways price action. I did put on a little bit of a hedge just in case we do go lower, because we're pretty high above the value area for the week. But we're resolving higher. All right. And, notice I wanted to give an example because I did this in the very beginning of the year. Right. We kind of spotted these patterns too, or maybe this was the last week of December, I should say. Right. Notice how this kind of was a similar situation. Let's see if I can get this appropriately. Oh, where did it go? right there. I think I'm just going to have to hold that because it's not going to want to, it's going to shift again. But here's what could be when you see something like this and you go sideways and then you break, it could be a head and shoulders. But so this was the break and it kind of kept going, right? This was right at the end of the year, right? And then this was the first week of January. So let's go back to where we are now and look at that S&P chart. And you want to be prepared in markets, right, for something that could happen. That's what I was kind of looking at for the day. And I put on a small put fly. Here's how I decided to play it. I did not want to commit a lot of anywhere near a decent amount of capital. I put on a cheap hedge, SPY put butterfly that expires in a couple days, for 8 cents, right? So that's the most I can lose, right? That's how I kind of like to play options, right? Is to give yourself a hedge, just in case hedge. And I did that right when we looked like we could be breaking, but we didn't. All right. So let's talk about, so we resolved higher, and that's great. And again, now that we've kind of done this, right, you could kind of just say that, hey, this was normal, burning off some of those overbought levels and now resolving higher. All right. So here's where, let's go back to the daily charts. Right. And you can see that we're continuing above the value area onto new highs. Very, very nice. Very, very, I would say overall, this move lately has been impressive, right? Here's a break above the value area. All right. And a reminder that we're in earnings season. So that means, I got caught in some trades today, and my trade of the day yesterday was the home builders, right? But what can happen with different groups of stocks right now? Well, you've got earnings reports and DHI, which I didn't even think that the report was that bad, but it gave a reason to sell. And this thing got squashed today, down 9%, and brought the whole group down with it. I was a bit overweight this group. I had an odd, excuse me, I had on a couple trades, Pulte, um, which wasn't that bad, but it was enough for me to get out of it. I was just a little bit frustrated too because I did not take a target in the trade yesterday. I was kind of doing victory laps. It's a reminder, if you're going to do a victory lap, make sure you lock something in, because this closed at 109 yesterday and closed at 103 today. So not good trading by me on this particular trade. I've had a lot of good trades this year, but I've also had a couple of these dingers too. Not real bad. This is still, by the way, getting out above my cost basis of where I got into the trade, but we want gains, obviously. So that's bad trading on me. And again, I always, in these videos, I always give you the good and the bad. We talk about, some of my really good trades, and we talk about a couple, where things not a couple, but wherever things didn't work out. Another one that I'm still in, which I got into yesterday, is this Lennox. Close the gap. For now, it's holding in here, holding above the 20-day moving average. So it did not break that 20-day moving average. So I held it. I also just got out of Williams Sonoma for gains today because I just wasn't going to mess with a group that was correcting. Even though it's not a home builder, but it is a retailer kind of tied to a little bit of housing. So I ditched this one for small profits today. Other than that, we go through some of these other names. I did not do a video the end of day yesterday because I was not feeling well, but I did a lot of trading yesterday, and I decided to reduce some risk, mostly selling into strength. Right, I got out of my Nvidia position yesterday. I got out of Microsoft. Both those names did okay today. I got out of some CLS yesterday, some Kava. I tried a couple new trades, so I want to go over those as well. Just to remind you that some of these trades, they are going to continue to be tricky, right? As I talked about, I'm sorry, I was just listening to Bloomberg Squawk, but I tried some PayPal, which was something that, sorry, let me just mute this. Just going to keep coming on here. All right, so PayPal is still holding above the 200-day moving average. I did get rid of this yesterday. I may try it again, but let's see if it can actually get going in a little bit of a better manner than what it did yesterday. I don't like when trades do this, when they give back that much of a gain, but I'm going to let this kind of, you know, watch this for the next couple days, let it digest, and see if it can stay above 63.74, which would also be the 200-day moving average. For now, I'm out of it. Another trade that I actually tried this trade twice because I did not go long on Friday. I bought some yesterday, and I don't like when trades do this. I don't like when you get such a fizzle like that. That's what I call. It tries to go higher, gets rejected. Tried to go higher again today and got rejected. That's not a sign of strength, right? That's a sign of weakness. And I think we saw that in a lot of stocks, a lot of momentum stocks yesterday, and a little bit more so today. Now, the issue is, right, now we'll talk about NVIDIA and we'll talk about Microsoft. Notice that still holding above the 5-period moving average. The reason why I decided to sell this yesterday, because I just thought it was a bit extended, and I've been in this all the way here. The question is, do I want to get back involved in it? I set an alert at today's top of value. It did not trigger for me, so I did not get back involved in it. And I'm happy to see this digest a little bit, right? Or maybe it was 600 was, oh yeah, that was here. You could already see today, tomorrow's value area. So 600 here. So it did have a nice close to the end of the day, but it did not take out the highs from yesterday. Right. So I'm hoping, and secretly hoping, because I do own this in my long-term account too, but I'm hoping that it does a little bit more consolidation after the breakout, and then we'll provide another setup. But I don't like it this extended. Also note the RSI here is an 82. So to me, that's usually a place to take short-term profits, which is what I did. Microsoft, which is going to report what I think on the 30th or the 31st, is it? 29th, actually, excuse me, sorry. So the 29th, this too, I thought just got a little bit extended here and got a little bit rejected, but didn't break the 5-period moving average and had a nice day today, up 60 basis points. All right. CrowdStrike, which is, another group that I was heavily involved in. I was either in one or the other, being this or Zscaler or ESTC. This did a pretty good job at basically, I think it almost closed this gap in here. Down 0.5% today, but the dips are still getting bought, and I'm kind of hoping for the same thing, just a little bit of consolidation here. Just to go through a couple of these, Palo Alto, that did fill the gap, still down about the same exact thing as CrowdStrike, and still holding above the 5-period moving average. Zscaler, I'll try this again. Yeah, outperforming. Had a big day yesterday. Was a stock that closed very close to the highs yesterday, and is continuing to trend. Spent some time consolidating around this virgin point of control, which is always quite normal when you see something like that. It's not going to let me show you where that is. Let's see if I could maybe zoom out from where. Yeah, there we go. So that's where that VPOC originated from. So consolidation and maybe going up to the next one. All right, that's Zscaler and ESTC. Another name, pausing right around this point of control. All right, so that's just a quick glance through. Like I said, I was going to talk about the China names too. Now, a couple names from our watch lists. It's a shame because I haven't taken any of these names. A couple of names that I tried that were on the watch list just didn't work out. Affirm was one of them. I did go long some Booz Allen, which I took off today because I'm kind of just reducing positions into earnings season. We're into the heart of earnings season. Monday had a very impressive move. right? The closed on the highs today up 6%. So congrats if you held this one. I didn't like that candle yesterday either. There's a lot that I just didn't like about the price action yesterday, but it held above the breakout. The positive was that it held above the breakout, held above the 5 period moving average, and really nice follow through today. Let's talk about those the Chinese internet names. So not only did we have some stimulus being announced in China, some people were a little bit critical that it wasn't enough to move the needle in terms of stimulus in China. You got a double dose with you heard about some insider buying going on in Alibaba. So I don't normally I kind of stay away from names that are in downtrends. You've heard me talk, negatively about China names just because they're in a downtrend. You're also dealing with a communist country. But has this stock bottomed? Well, one of the things that I would say here is that the RSI, even though price did go lower, made a new low, the RSI did not. It's usually a pretty good sign. But you're going to have to deal with a lot of overhead resistance, right? You're going to have to deal with 74.84. That's a top of value, as well as the 50-day moving average. And if you're not long in here, you could wait until price gets above there because, certainly if you look back at the last 6 months, um, you haven't missed anything, right? The next thing, if we can get over 74.84, then you're going to have to worry about this virgin point of control, right? So what are these red lines signifying? Overhead supply, right? There's probably going to be sellers waiting to get out there, right? So that's why this becomes such a complicated chart. Usually, and again, I'm not ruling it out, but usually when names reverse and start to go higher, they base for a while and then they start to move higher. So the insider buying is a catalyst, but if we look over at this weekly chart, you're also going to see things that you may not want to hear about if you're trading in the short term. 79.47 is the bottom of the value area, so we're not even inside value, right? So we've got a lot of things to fight through here. So if you're trading for the short term, you could also take profits there, 79.47, and that could be your trade, right? And then you could see if it goes sideways and then begins to go higher because you're not even in that stage yet, or you're still in stage 4, which is a declining name. So if you get above 79.47, then maybe you get into stage 1 and begin to kind of go sideways a bit. All right. But again, I think if you're looking at the stock and if you're not looking at, a target or getting out of it here, if you're looking at it thinking it might turn around, you're in it for the long term. All right, guys, that is it for today's price action. Again, I reduced risk the last 2 days just because I think that we're going to get a lot of curveballs like we saw in DR Horton and the home builders. But that's one curveball. All right, another curveball I would say is Netflix, crushing it, and it looks like that VPOC may be taken out, right, up to 534. So I think you're going to get plenty of this. That's if I were to make a prediction, you're going to get some surprises upside and to the downside. Sometimes it's better to wait for the results and react once you have them. All right, guys, have a great night. See you tomorrow.